All right, everybody, good morning, America. Good afternoon to Europe. Hope everybody had a good weekend. I wanted to record on Friday. Did not get a chance, but the world keeps moving. A few more days of data piling into the power curve calculation. Going to throw everybody for a loop today, starting morning America time, but showing this in euros. All right. This Bitcoin power curve priced in euros, 55K or thereabouts. Marching along the bottom. Notice how in dollars, it's very similar. Or I should say in euros, it's very similar to the dollar chart, except here we really set a proper bottom to the quantile in dollar terms, but in euros, not as much. But both of them, regardless, are, whether you're dollar-based or euro-based, we're at super cheap prices. Going to do a couple different charts today that I haven't shown in a while. I think a lot of people get burnt out on Bitcoin, especially if you haven't followed it for a long time. It's quite interesting that we've had such a drop after such a weird couple years. And though I don't know for sure, it's probably better for the long-term fundamentals that we drop quicker rather than longer if we're talking about rebounds in price. Although I don't know for sure. All right, this is certainly longer of a dip than here, just before the silly season. Was about a month when it just fully broke down and gave people super cheap prices. But that was mid-cycle, right? Here is not. When I say mid-cycle, meaning I'm assuming that the end of the cycle is the blow-off top, let's say, as an example. All right, so that was a mid-cycle thing. Here, if the 4-year cycle is still alive, and I know a lot of people said it wasn't alive at the end of last year, this could be the start of it. So unlike prior cycles, we're puking early, and perhaps that sets a base for a stronger run overall. But nobody knows until we paint the charts. I want to look at gold, silver, a lot of fun stuff, but where is it? This one, I haven't showed it in a while. So these are short-term holders in loss and short-term holders in profit based on their UTXOs. And I'll show this as a percentage in a second because it'll be a little bit easier. But just as a function of UTXOs. see that the UTXOs grew a lot at the bottom of what we term the crypto winter here. Also the top of the end of that in 2017, 2021, and around the halving, 2024. So these are the actual pieces of Bitcoin, you can say, little pieces of Bitcoin. At this point, there were 30 million of them, not Bitcoin itself, but little pieces of it, like counting every little Satoshi, so to speak, in each individual unspent output. Now we're quite low. It's going to take a second, but now we're looking at this as a percentage. All right. You know, we've had 3 major sort of drawdown periods. And when they happen, most Bitcoiners are looking at losses, and some to an enormous extent, right? 95% of short-term hodlers, I should say, which was within a half a year, roughly. I think it's 155 days. This is the definition that is applied from Bitcoin Lab. You can find this data at Bitcoin Lab, by the way. I'm not running my own node here for this purpose. I am for other purposes, but not for this purpose. But when you're seeing so much right on the chart, you're seeing usually exhausting of price, right? As you see here and here. This is, I think, a helpful one, though, because you can see, you know, this front running that occurred with the ETFs. Well, I was going to say that I had more, but I guess by and large, it always, whether you're short or long term, it's going to turn green, of course, when you fully bottom out. I was just going to say it's a little bit different because you have sort of a lot of short-term hodlers going in, going out as we move up the cycle here. I don't know how long it's going to last, but you know, to me, the 4-year cycle is still intact. Right? Maybe it's not a year of prices finding bottoms, maybe not a year this time, but it has been at least a year in prior cycles, the main 3 cycles that we've had. Nothing repeats exactly, right? But this has certainly been a strange one. But we are in the process of finding a bottom. Good morning, Fred. Thank you. I think I've been shadow banned or something as well. Usually I get a couple hundred at least, but people have been slow to log on recently. Or it's just me. So anyway, we're finding a bottom here. Let's go look at, okay, this is Bitcoin in terms of silver, just to show you how cheap The silver bugs are getting it. Quantile, percentile analysis. All right, back in the FTX, SBF fraud days, under 700 ounces of silver per Bitcoin. Now, we did hit that, but just very briefly right there, January 29th, 718. But if you ask me, this is going to be the bottom. All right, and I'll say that specifically because of what I think is going to happen in the gold market. At 700 ounces of silver, it's hard to imagine that the silver bugs can get that much Bitcoin for that cheap for much longer. Right? It is super cheap. Right? This is the 0th percentile around the power trend, which is a 95.6% R squared, just like most of them. Right? These are silver figures here. But it's so cheap. And then the next line up is the 10th quantile, way far away to 3,200 ounces of silver per Bitcoin. And then if we look at gold, you get a different picture. Keeps getting cheaper in terms of gold ounces. We're not quite at what I think would have to be the bottom. I'm not saying it gets there, but getting under 10 ounces of gold per Bitcoin, hard to imagine. Good morning, Lunar, or good afternoon. Ninth inning as far as shaking out the Bears. It's a lot of red. A lot of red on the screen for a lot of people. But spring comes. Spring comes after that. Just to remind you again, this is not the cheapest the power curve has ever been painted. Okay, so this is as the power curve has evolved over time. It's not a perfectly straight line. It does change a little bit. I mean, not perfectly curved like the actual all-time curve. But we're looking at 129, really $130,000. This will match if I get close enough. $129.9 thousand per Bitcoin is the power curve. And if you look what we predicted way back in the past, it's not bad, right? And it always does fall down just a little bit. From the early days, we were way high, crazy prices, right? I didn't know this until I had AI help me with this chart because I was hand calculating it before, but that's 564 quadrillion Bitcoin. 564 quadrillion dollars per Bitcoin predicted back in August 2010 based on the trend at the time. But just so we're all clear, the nadir was actually here. All right, so the worst price we ever painted on the power trend. And it doesn't matter. Like I'm showing you today's forecast, right? So this is all the way back when Bitcoin was $2,000, right? Price. The power trend predicted today, February 23rd, 2026, $123,000 Bitcoin. I understand the price is under that as well, but still, it's a pretty good prediction. And it shows us that the fact that that's the cheapest still, kind of nice for the power curve, because the actual power curve, like I said, is about 130. So that's the cheapest that we ever painted. Here is not as. So it's a good thing. Yes, sir. Good afternoon. Yep, very good point. We might have war. I mean, we have war, obviously, in Eastern Europe, but the broader war, which you're perhaps mentioning, could happen, but we'll see. But I agree with you overall. It is still highly suspect. I agree with you. Lest people forget how the long-term chart of gold looks like. Exponentially, it's here. And no matter what anybody says about how good or bad gold is, it's a fine asset, but you got 5.4% CAGR since the end of 1970. Until today. That trend paints a 5.4% CAGR, or any date, because it's the same anywhere, right? 5.4% CAGR. A lot of gold bugs would pick this one when they do their measurements. Pick $35 an ounce back here, and then $5,000 an ounce today, and say, oh look, gold gets you 9.3%, but that's not really how you do it. Over the long term, a lot of people bought here, a lot of people sold here, including Gordon Brown, former Chancellor of the Exchequer. But the overall trend is that black line. $5.4 per year. Not terrible, but not great. Although I'm happy for gold bugs. Certainly getting some nice profits, but just be aware you're at the top end of this channel relative to the all-time exponential trend, which is 5.5K. Silver, same, more extreme. Let me take the tooltip off, you can see it. That's the 50-year, 55-year pattern for silver. And the slope of that black line, 3.8% per year. By the way, eventually going to release this for everybody. I know that people always ask where I can get these detailed charts. I'm still working through it, but we'll get there in a month or two. What do you guys think? Dead cat bounce? It's a big wall of worry. And meanwhile, this is the most interesting chart, is Bitcoin in terms, oops, sorry, not that one, this one. Bitcoin in terms of silver. Just couldn't get any cheaper. And look even at that volatility, right? 3,000 ounces of silver per Bitcoin back in the fall. I'm not saying for Bitcoin, I'm saying for silver. Now 700 ounces of silver per Bitcoin was the current best. Today sitting at 750. Yep. Definitely agree. It's really hard to say that metals were good for inflation from 1980 to 2000. Much more cyclicality than, and long-term cyclicality, I think, than people would admit. Hello, AGM So it talks about falsifiability. We have a long, basically, the power curve itself is completely intact. And there's no one price that would do anything even to invalidate it. You would need years to change this R squared, right, which currently is about 41% CAGR. Oh, sorry, that's in terms of silver. Let's go back. This is euros for my European friends in my time zone watching this afternoon. But if you go on log, you see where it's a very nice looking channel. And we're at the bottom of it, for sure, painting new lows every day. But even if it stayed lower for longer, you would just stretch those percentile bands out. You wouldn't break the model unless it was, again, years of, if we're talking about breaking it to the downside, would be years of sub 40% CAGRs. I'm not talking like 2 or 3 years, but like 10 years. That would break it to the downside. Meanwhile, you have this curve which exists in Bitcoin's hash rate, addresses, market cap. It exists in a lot of places. So again, I don't want to sound too confident. I first tweeted about it here. All right. And the R squared has even gotten better since then. Yeah, you're absolutely right. I could show you Apple. Also, very good point. I always change my starting date for Apple. I think this one goes back to like 97 because someone asked about it. I could change it immediately, but whatever. It's roughly when the World Wide Web started. There's Apple. So unlike Apple, by the way, or silver or gold. Sorry, I always lose myself now. It's here. There's gold, log linear, silver, log linear, Apple log linear. So here we can see, as Lunar has said, best inflation hedge for 3 generations, 31.6% CAGR. Pretty remarkable. I'm starting it here. It would be slightly less. In fact, it would be less if we went back to the 80s, but you know, for this is 30 years right here. So it's pretty remarkable. For fun, we can paint this out. So by 2030, $1,200 price, 265 right now, 1,200, 1,100 bucks. But Bitcoin's interesting because Bitcoin is not a straight line on log, it's a straight line on log. And so far it's very difficult to see that this wouldn't hold. It doesn't seem like it's breaking it to the upside, that's for sure. So we're just pulling it down, right, every day. But again, we're not even at an all-time low. I'll tell you guys when we break a low. Even when we break a low, it doesn't mean like the power curve is broken. It just means we're at an all-time low. We're at an all-time low relationship of the power curve and Bitcoin's growth. But we're not. We still have $8,000 to spare, which is a long time when you consider that the curve itself grows $110 a day. So Bitcoin grows $3,000 a month according to the curve, and we still have $7-8,000 of price prediction space between where we are today and where the lowest value was set, which was way back after this bear in from 2014 to 2017. This was and now I'm looking at this line. The lowest painted value was right there, May 2017. So you see that price there. Today's forecast, that's what the price projected for Bitcoin all the way back in 2017. 123K, which is not bad considering this doesn't have 10 years of pricing data. So this is actually one of the best charts to look at. Again, I know we're supposed to be, you're asked to the other one, AGM, you asked me to falsify or to show problems with the power curve. This shows the benefits. I mean, the positive features of it. It actually does have some predictive capacity. Could you imagine when, and I wasn't posting about it here, posted about it here. But all the way back here, it's still projected at 124K price. I know we're under that now, quite a bit under it, but still. The curve itself is remarkable, right? At the end of the day, it's a remarkable relationship. So yeah, we're washed in red here. Short-term hodlers underwater, which happens. Long-term hodlers, yes, although I don't have them handy at the moment. Notice, by the way, Apple. So this will get interesting in a few years, by the way, right? So Apple, if it keeps up its 31.6% CAGR over the last 30 years, will meet Bitcoin's. Why is that showing that? It's an all-time. It's 40% is the last year compound. Remember, the CAGR drops with a power curve. It's not constant. But anyway, Bitcoin right now returns 40% on a curve. On a curve, Apple returns 30%. So it will be interesting when, 10 years from now, if Apple's still bulldozing because of its network effects, and we'll see what Bitcoin does. Some political charts, so stay away from that for a second. Yeah, thank you. I should write that down. And I don't watch moving averages as much, which you might find strange, but I do need to get the, obviously the RSI and a lot of things into this system. That's interesting. Well, we can go political. So here's all the money in the world on a percentage basis. I still have some hope for the West. So I have countries that are democratic versus countries that are non-democratic versus the global South, basically, which is in gray. Note that China is actually down in its share. Don't look too much into this. We all have inflation. Everybody hates politicians, the tax and spend, and all the rest. But this is actually the value of currency, monetary base globally, $27 trillion as of today. So China's actually down from 26% down to about 19. If you look at GDP, that's not the case. They're 17%. Or back in 2008, they were only 8. You know, less than 60% of what I'm calling the West here. The bottom level is United States. Next level is NATO, except for the U.S. And then here is military spend. Also realities that everybody's going to have to live with. Iran is quite small, but that's where they are. Notice how large Ukraine is here. But like I try to say to all the newsletter writers, I mean, whether these things change a couple bips here or there, world's going to keep going on. Tax and spend. Very important election for democracy will happen in Hungary. This is old data, but 2023, Hungary is, with the Orban regime, actually the poorest now. They're below Bulgaria. This is 2 years ago even. So Bulgaria per capita, this is a household consumption. It's basically the consumer spend part of GDP. It's usually how people measure like the wealth of a nation. Even though I know it's not like how much gold people own. This is a flow. But it's all the European Union, Luxembourg, Denmark, Austria, Finland. Ireland is high because they got big corporates there. All of Eastern Europe down here, including where I am right now, Latvia, 14.2K. Hungary's got a big election, though, this year. And they're actually the poorest in the European Union at the moment. We'll see. In my view, all these things are going to continue to be more relevant, more related. And Bitcoin, in terms of silver, in terms of gold, is a great governor, right? I'm happy for the gold bugs, but how much cheaper a gold bug is going to get Bitcoin? I highly, highly doubt it's going to be below this line. I don't make many predictions, actually, other than showing you guys the stats, and I would say 99% sure we don't bottom below this number in gold. Even hitting 10 seems highly suspect. We might. I don't know for sure. But Bitcoin is so cheap for the gold bugs at the moment. Historically cheap. By the way, I have every 5th quantile here. Most of the other ones I do it in every 10th. But just to show you where the vast majority of the data is distributed, right, is where all the lines are. So you see how cheap Bitcoin is right now for gold bugs. Nothing wrong with that. Yeah, I mean, statistically, guys, this is precisely what a chart like this is for. Like, I can't tell you what Bitcoin's going to do a month from now, but I can tell you 99% of the observations of Bitcoin relative to this curve, which is a 96% R squared, 95 in this case of this gold. Yeah, this is gold. 95.1%. Bitcoin has 99% of the time been more expensive for the gold bug. So statistically, that's where we are. Power curves become straight lines on log. You know, if you take off the 100th, you take off the 0th, it does look weak. I mean, it does look like some panic moment. But gold and silver have had different, you know, gold and silver have only boomed 3 times in the last 50 years. And now one is one of those times. Bitcoin was around the last time gold and silver were booming, which was like here, actually here. Bitcoin also boomed during that time, actually precisely during that time. If we look at it on, again, this is euros. It's not as extreme, but you can see that we're cheap. Gets a little bit wonky when I zoom in, but what can I say? It is cheap. It is very, very cheap. Hello, Dance 7988. Yes, just got that question as well from before. You have to see years of other stuff happening. Let me show you. I don't have my old engine pulled up, but I will pull it up because I have a better chart to show you guys. This is my new one, which I do want to release to the public. 1 second. Sorry for the dead time. Why is this not pulling up? Give me a second. It's a good question, though. It's a good question. I will show you. Just give me a second. But the bottom line is, what you would see is with this chart, if we really like fell out of this, is first of all, this would have to go way down, which is a really good R squared. That means Bitcoin moves around this line, this black line, 95% better than it moves around the average, which makes sense, obviously, because it's a financial asset, but that's the strict definition of the R squared. What would happen is you would just see these lines spread apart. Like these bands would get farther and farther apart as this thing, if it stayed lower for longer. And again, this is in gold, so it looks more extreme. If we look at it, here's in euros. As I just said, this is without even the more extreme bands. You can see it's It's closer. But yeah, it's cheap. Any way you cut it, it's definitely cheap. I'm running too many instances here. Let me know if you guys want to see any other charts. Definitely. Yeah, I agree with you. And by the way, people will have different numbers, right? Mine catches a lot of cheap prices earlier on. This is going to be weird, I think, yeah, because I go back to Bitcoin Pizza Day. So Laszlo's 10,000 Bitcoin for 2 pizzas. It was like 0.4 US cents per Bitcoin, something like that. $40. It was paid in sterling with a credit card, if I recall correctly. So mine, this is obviously very thin data, but still, at the end of the day, it's a pretty remarkable fit. Let me show you guys while I still try to get this other one loaded. Let me show you the money supply, because I've been pulling that for a long time. And how that relates to Bitcoin's price. So this is global money supply, which is a very delayed piece of research that I do, because many central banks take a long time, even the US. This is not M3. This is basically the central bank balance sheet. There you see this is the Federal Reserve down here in blue. QE 1, 2, 3. And this is the rest of the world priced in dollars. All right, so we're at about $27 trillion as of last September. When I first started doing this, which was also about 8 years ago, right, which was about here, I would have told you, well, generally it looks like when they print, Bitcoin always goes up in price. And even here, you can see it was going down globally, although this is also currencies losing value against the dollar. And the dollar wasn't printing or easing. Actually, they were kind of flat. They started to ease actually around here, a little bit down. See, they topped out at like 4 trillion. It went down. But anyway, it is true that we actually have mirrored big booms in the fiat currency central bank money supply here and here. Here is, you could say yes, but Bitcoin's quite small at this point. But it's also true, as we saw over the last 5 years, as the central banks cut or kind of kept the money supply stable. This is also weird because there's like 90 currencies in here, but they all lose value against the dollar. Dollar remains the best looking horse in the glue factory. And Bitcoin went up. So if you follow Sminston he's doing some good charts with Bitcoin against copper or the PMI. The cycles, we're not quite sure, right, how they're all going to play out, but Bitcoin can go up when the money supply goes down. It can go down when the money supply is going up, which it's probably going to start doing. We already know it's doing that right now with the Federal Reserve just a little bit. Month end projected just today's price, 65.4K. I do. Where would you like me to start the regression? Because it matters, as you know. Hello, Felix. Ah, yeah, someone mentioned this. I need to look at this. Maybe this was you, actually. Thank you. I need to look at that as well. It's a good point. Tell me where you want. Okay, 1989. Got it. Let's see. All right, here's Microsoft. %88 R squared, not as good as Apple, though I didn't show you back to 1989. .com. No, these are split adjusted prices. The slope of the curve, 16.3% per year. That's the black line there. Slope of the CAGR. It's pretty good. Yeah. At the end of the day, though, when you do have these stocks, it does suggest HODL, doesn't it? Of course, these are great deals down here. Just like note, by the way, people, where Bitcoin is. But stocks, obviously, they're moved to, they can be, just much less cyclical. Commodities can be more cyclical than stocks. And even if you bought here, right, we're above. But you're right. I mean, we are. Never financial advice here. I'm just showing you guys the trends. Who knows if this is going to double next year or not. Projected out 2030, $630. That's the black line. Get up to the red lines, 850. Get to the blue lines, 450. Still looks fine. Ah, yes. I need to, very good point. I need to show the old Bitcoin in ETFs values. I don't have that one pulled up. Yeah, that's interesting. Exponential, though. These are all, stocks are all exponential. Bitcoin's the only one that's power, which is weird. Sorry, is this going to open up yet? All right, I'm finally going to be able to show you guys the old stock to flow versus exponential comparison. I think if this instance would get going. There we go. So a couple questions this stream, which I get a lot, is do you think the power curve is going to hold or is it going to break? You got to look at the other things that we could compare Bitcoin to. One of those is our fund stock to flow. And so back to this question, we had another question like this as well. All right. Here's my old let's get this showing for you guys. Is this updated even? Yes. All right. You guys see that? I think. Yes. So let's take the comment out. If Bitcoin were exponential, all right, so this is log linear, right? It would look like this on log scale. We'd have straight lines going through it. They may not be perfect, right? Here's Microsoft over 40, 30 years, 35 years. And it's obviously not cyclical at all, like Bitcoin in a short-term cyclicality sense. But still, you can draw the straight line through it, and you can tell that, okay, by and large, it's going to grow 16.3% per year. If you buy higher than this line and sell below it, you'll get less. If you buy under, sell above, you'll get more. But that's the deal, right? Now here's the Bitcoin price, which is the intersection of buyers and sellers. So it's the growth of the network. If we put a straight line through it, it looks like, well, let me put the power curve through it, actually, so you can see it. All right, power curve looks like that. Same curve. But if we put a straight exponential, if we shoehorn in an exponential trend through it, you get that. And now take the power trend off. So if one wants to ask the question of is the power curve like a fad or is it like stock to flow or whatever, not at all. Because one can clearly see, okay, the R squareds are 10 percentage points different, but the price hasn't even hit the exponential curve in 4 years. Whereas the power curve, it's touched often in the last year, although it is below now. So you don't even have to really do any more analysis than that, right? Just to see that this is a pretty damn good fitting curve. Okay, now, another thing. Remember how I told you the curve has fit pretty well since 2016? All right, I can show that. I've shown this many times, right? If we only took the pricing data from 2016 until now, I'll put that trend on and see if you can spot the difference. All right? It only grows once, I think once, yeah. But you can barely see it. So I got to zoom in, zoom in, zoom in. And this is just remarkable. By the way, this is slightly different projection. It's more towards 130 on this old software, but it doesn't matter. It's all close. Anyway, the where this one is more towards 130, at least my numbers. In any event, $7,000 difference between these two curves, and the black line includes all of the data. The dotted line stops inputting any data from here and just projects. So it's a remarkable relationship, what Bitcoin has shown. And then, if I show you guys, say, Plan B's model from 2020, that's how it looks. All right. It's important to look at the numbers, right? So even though this is a log chart and it looks kind of close. It's not. $6 million projection. His 2019 model is better, but it's not that much better. Still projected to $800,000 Bitcoin by today. And you'll note that his models are closer to an exponential trend. Why is that? It's because he uses exponential coefficients in them. If you go back to his original articles, he's writing about how gold grows it this way, silver grows it this way. It's completely wrong. Gold and silver grow exponentially. Bitcoin grows in power. So he's mixing models, basically. And that's just not, it's not how Bitcoin grows. Mm. Great advice. Great advice. You know, again, I'm not a big stock trader, but as Lunar is saying, I mean, if you did chart this out, right? And by the way, the straight lines never, just let's show this. The straight lines never always exist, right? Really this straight lines we're drawing them with all the data. But of course the exponential curve itself changes over time, right? I was showing you how they evolve. This is what it actually looked like at any point over the last 35 years. So someday I'll have to have a more fancy way to draw this, but like it was way steeper here, like probably, 30% CAGR. Then it flatlined, right? Now it's back up again. So the net of all of it is this. But of course, this didn't really exist at the time. You're kind of looking at the tangent. It's not really the right word, but you're looking at how the curve would have projected at any given time with this gray line. But the point is, this would have been a huge undervaluation at this point, right there, during the global financial crisis. And it would have been, obviously a great time to buy them. So when you get to levels, no matter the asset, but when you get to levels that are seriously undervalued relative to the asset, I know a lot of people that think gold is just hanging around up here. Look, maybe gold doubles and then it falls back and this is the new base, 5,000, maybe. I have no idea, but it usually doesn't rise up, explode, and then just hang around, typically. Yeah, these are great ideas. Thank you. I need to put more of them in there. I think Bitcoin Copper, as Sminston has done, the PMI and credit and housing, all very good examples. Also, we can do this curve in different currencies, right? I can show you guys. Hold on. So here's Bitcoin yen. Not as cheap as gold. 10.4 million yen per Bitcoin. And then here we have a relatively strong oh, I didn't realize that it was confusing. I need to fix that in the code. Sorry. This is yen, but I moved it from my euro chart. I have to fix that. I have this as well. So many bugs. I'll just show it with the bug. All right, so here's Swiss franc. It says euro at the top, but it's Swiss franc. You see it in the tooltip, Swiss franc. So this is a strong currency. Looks more like gold. Very, very cheap. 52.6 thousand Swiss francs per Bitcoin. Historically, some of the best prices. I do have a rant as well for the silver bugs, just because it's fun. I've said this a lot when people have been talking about stock to flow. Like, I got nothing against gold bugs, nothing against silver bugs. I'm happy for them. I wish I had more gold and silver. Probably would buy more Bitcoin. But there's a theory that, oh, maybe I won't be able to start it. So I'm switching over my databases and it's taking too long. Okay, I got it. There's a theory that the old price of gold to silver, right, used to be 15 to 1. There's a theory that it's going to go back to that. So the silver bugs are going to really win out because right now it's, actually right now it's about 60 to 1. But first, let's look at the ratio. All right, so this is the ratio over the last 50 years. A little bit different analysis. This is why you got the wavy lines, but it's the same idea. It's not a, it's not a screaming R squared at 53%, but you can see that generally gold gets more expensive relative to silver. So you're fighting a trend. You might say 55 years isn't a long enough trend. That's fine. But when you get very close, to these routes that silver has relative to gold, they last a month, right? Here was when silver was almost $60, April 2011. Gold silver ratio was 32x, 31.7. Here it is in 1980. Got down to 15. You can't see it with the tooltip, but it got down to the old ratio. See, it stayed there for a month. So now the question is, I believe, just a question of that for this. The silver bull and probably the gold bull as well will end when this bottoms out. And it's not going to bottom out at 15 to 1 and then stay there. It might hit 15 to 1, but it's not going to stay there. I will show you why it won't stay there. So I have a few different charts on this. This is kind of a tongue-in-cheek one, but this is the 500-year gold-silver ratio. So Isaac Newton did it here. He started bimetallism, got this 15-to-1 ratio. And so people say it's going to go back to it. So here's the actual ratio, gold, silver. Over a long time, metals were fixed. The United States had it fixed. England had it fixed for a time. California gold rush was here. Generally, gold is more valuable than silver and has been, right? This is the modern trend that I just showed you before. But the question of whether silver relative to gold will go back to 15-to-1. If you look at it from the perspective of mining itself, it's actually gone the other direction for 200 years. Meaning, silver is actually overmined relative to gold by about seven units, 7 ratio points. So it's right now, there's about what is it? It's 60 billion ounces of silver worldwide, 60 billion ounces of silver, and 7 in gold. Whatever on the edges that gets you to 8.8x. So for silver to be way more scarce, way undervalued compared to gold, it would have to actually go the other way. So it shows you that that argument's just completely dead in the water. I mean, there's no way. I mean, I guess you could say, okay, like these AI data centers need a lot of conductivity and they need a lot of silver, whatever. There's still way more silver that has been mined over the last 200 years compared to gold than ever. Right? If you guys understand what I'm saying, it used to be, the mining ratio used to be around that 15-to-1. In fact, silver was a little bit more scarce, even 20-to-1. But now it's only 8-to-1. So to get back to 15-to-1, you'd have to go the other way, which means silver would have to be more expensive relative to gold. So the mining ratio doesn't really play. It doesn't really play with that plan or that idea that the gold-silver ratio, which is this, is somehow going to go back to 15-to-1 and just stay there, when the actual trend is something like this since Bretton Woods ended. So there's a little diatribe on. I know there's a lot of Bitcoiners that don't like gold bugs or that don't like silver bugs. I don't really care if you're a gold bug or a silver bug, but that's how I'm looking at it. Yeah, I'll have to see. You're probably right. But anyway, I'm happy for the gold bugs, happy for the silver bugs. There's a lot of money sloshing around in the AI markets too. But I've used this analogy a lot. In real estate, you can value, I used to do a lot of real estate spreadsheets and projections like this. And you can value a building based on its income or based on its square foot or square meter value. And they kind of govern each other, right? Like if you're in the town center of London, whatever, you're like 15 I don't know. I'm sure you can. I live in provincial Europe, so I don't even know what town center London real estate prices are per square meter, but 20,000. I have no idea. But that price itself is a governor, and then also whatever you could make in from the building per year in rent after you pay your expenses, that's another valuation metric, which is the cap rate. But they kind of keep each other in check. And that's how I'm looking at this. Silver versus Bitcoin, gold versus Bitcoin, and then dollar or euro versus Bitcoin. All of them are screaming discounts, which to me is, again, bullish. Do what you need to do. I'm glad I was not telling people at the end of last year to get ready for major bull runs. You're not going to find that on this channel, but look, this is what this analysis is for. It's to show you relative strength or weakness where we are, and it doesn't get much more clear than this. Any other questions? There's one more, which I think is interesting. So if we go back to this is in euros, but it's similar in dollars, right? What's the sort of general trend of how close we are to this black line over time, the deviation? We get this chart. So back in the day when we were super volatile, we could be 600% over trend, 500% over trend. And then during the bears, you get 70, 80% under trend. This isn't from the high, it's relative to this black line. Okay. Lost it. Too many charts. God damn. Sorry. So what I also think is very interesting and good for longer term investors is you see, all right, we're still pretty negative right now. But if you look over the longer term, you take away the big swings, you just look at this longer term, and actually even midterm, all right? On a 30-day average, the price could be at any time 200% over trend, or sorry, this is standard deviation. So it's it's 2/3 of the time we could be 184% above trend or 184% below trend. That's what standard deviation is, 2/3 of the time on a 30-day window. So way more volatile. And now, this is very similar to Apple. It's deviation around the exponential trend. 2, 3, 4, 5%. Volatility's come way down. Good morning, Franklin. Thank you. Thank you. I wish I knew, my friend. I wish I knew. Yeah. No, I mean, if you guys are watching this channel, I'm sure you're well steeped in the beauties of Bitcoin. But if you like Bitcoin at these prices, I mean, are we not loving it at these prices? And I think by the way, people that have missed the earlier diatribe about short-term hodlers, a lot of red. Usually when we go down, you got a lot of red on this screen. And we went very quickly from green to red. So it's blood in the streets, no doubt. Just no question about that. Uh, I'm not, but I'll write it down and add it. I, uh, I will be able to provide this for people probably on like a requested basis. But yeah, I have like just the main stocks. I don't have them all loaded up. It's too much. But I do want to get now. If people want to see more stocks, I'll add them. So I'll do it, and I'll add that one. But that is not one that I have handy. I'll write it down though. But yeah, back to this one from Satoshi. I agree. And this is also why it's good to look at the money supply, right? I mean, Bitcoin is, 5% of this global number. We got 27 trillion in global money. It's just going to take time. I think I might be repeating myself at some point, but just like with real estate, when you have sort of a couple different ways to measure how expensive or cheap something is, I do think this will be like a new standard of value for Bitcoin. So comparing it to silver, comparing it to gold, comparing it to fiat, and just seeing where we are. And the only reason back in 2011 that Bitcoin was growing relative to silver is because it was growing way faster than silver was. Silver topped out like here, right there, at $58 or whatever it was. And then Bitcoin went to $35 just before the first MT Goxing. There was a hack like the day before this date and the day after. Hello, Chad. No, it was not expected. Um, it was just the word that would get me demonetized or censored. It was that silly season of printing. In fact, they had been going well under trend for a year at least. And the markets were seizing up. If the monetary wonks remember, there was the repurchase agreement market or the repo market, which is like basically trading of treasuries like cash. So people would lever up treasuries and pay a little bit more interest rate than the treasury themselves would pay, hedge funds with long and short and whatever. It's a very liquid market, deep market. It's part of M3. That uh, the the overnight rate for purchase agreements spiked like over 10% in a night when it's usually super cheap, like under 1% or whatever. And that was precisely here. And probably all was not well in the markets regardless, but many other things happen in the world to paper over that. And so it was actually trending down. It was going more towards, if that event didn't occur, we would arguably be closer to a totally different trend line. And I think I have that on my old engine as well. I'll show you guys the trends for what's that for US? There's also another reason why I think money printing is going to come pretty fast, especially if Trump gets his way. All right, that has 3 trend lines. And that's not the one I want. Sorry for the dead time. It's coming. All right, so here's super long-term trends for the Federal Reserve. Federal Reserve did not finance the entry of America into World War I. Actually, it seems like a lot of money, but compared to the debt, it's like 1%. I'll show you in a second. But they did bring up their balance sheet during World War I. It's true. J.P. Morgan did most of the financing, though. In any event, they really rode it up in World War II. And this trend line stops here after Bretton Woods ended. So this is how long they had the gold dollar standard working, like 25 years. Not that great. But what I do think, like all the, the Larry Summers, someone who's always in the news these days, all the talking head economists, they cut their teeth during a very, very, the Great Moderation, very easy period of American finance. You just increase the Federal Reserve's balance sheet 6.7% per year, and that's it. This is when Milton Friedman was talking about a computer would do it better. And it is true. I mean, they were actually running it like a computer. It's the Fed's balance sheet. And then things went crazy here. But also notice that you can't, just looking at this chart alone, you couldn't predict that they were going to do what they did. And you couldn't even predict that the markets were, you actually see it go down as they tried to raise interest rates during this period. It's about the only thing you could see is it was growing slower than it was. And then here's the current trend. So the Federal Reserve is under trend. And then if you look at relative to the debt, all right, which everybody should look at, the Federal Reserve has plenty of room compared to where they were 5 years ago. 5 years ago, the Federal Reserve held. So this is actually what you call the printing press. Like, it's the assets of the Federal Reserve versus the liabilities of the government. So if I just took everything off, except for this. This is how many cents on the dollar is printed of American debt. Topped out at 18% when the Vietnam War ended. And they just went faster in growing debt, by the way, because this was also when the gold standard ended. But here it also topped out at almost 30%, 28.3. And now you can see it's just ticking up again. And we all know where the US president wants that to go. So in my opinion, they have plenty of room to print. I'm not saying I agree with it or it's a good thing. I'm just saying they have plenty of room. Total debt, 38 trillion. US holdings of that, 6.3. Sorry, US Federal Reserve holdings of that, 6.3 trillion. I don't remember that story, actually. He used the word bailout, yeah? Interesting. Yeah. This is the ultimate signal. I mean, no matter all the noise of all the news, like, this is it. So notice, by the way, when the United States went into World War I, even though they had a lot of debt, it was not being financed by the Federal Reserve. The Federal Reserve held 1% of it. The Federal Reserve was getting, like, started, so that it was a good way for them to blow up their balance sheet. But the private sector actually financed America's entry into World War I. Surprising to people. Not as much the case for the Depression and World War II. And that's when we got up to 10% levels. A lot of shenanigans around this period. Hello, Rajat. I mean, AI is going to maybe give you a better example than I could. We showed, if you just use the simple benchmark of Microsoft versus Apple, Microsoft looks a bit hot. Apple's relatively cheap. Relatively. But again, this, I'm not a trader, so I just like these to show you sort of the general levels. But I mean, this exponential growth still. Like, you could have bought Microsoft in 2021 during the height of the meme stock craze and still been fine. You're actually about the level of Bitcoin, right? Bitcoin was 60 grand. Right here now it's 60 grand. So Bitcoin is certainly closer to what the big tech AI stocks are doing in market cap and everything, but what can I say? I'm a not financial advice guy. I just like drawing the trends and showing you guys. They're going to print. That's for sure. I keep coming back to this one. Right? How cheap are the silver bugs going to be able to buy Bitcoin? Is Bitcoin priced in silver? Right, like even back we're cheaper than 2017 high prices in silver. And keep in mind that 2017 high price in dollars was 20 grand. So we're 3 times higher than that in dollars, but we're cheaper than that price in silver, which to my mind is mind-boggling for the Bitcoin asset. Mind-bogglingly cheap. Might. Yeah, the deflation of AI is just remarkable. I mean, even these charts I'm showing you guys have. When I created this thing, it was without AI, and I had to get a Finnish coder to help me in the Baltics, and it's just a lot that I can do with this and this. Haven't got it all set up. Still some bugs, but it's unbelievable. It is unbelievable. I mean, you guys probably don't even need the data of Bitcoin price, and I imagine ChatGPT could give you a chart like this, maybe even less buggy than mine. So I agree. This deflation that's like this, what are they calling it? The SaaS apocalypse. I mean, that to me, that is real. It's going to be massive. And then I think your thinking is quite correct. Probably UBI is going to come into this. I've said this a few times on this stream, but absolute bottom for me is this line for Bitcoin gold. And I'm not saying it hits it. I would say 99% it does not hit that. But getting under 10 ounces of gold per Bitcoin is, again, crazy if you consider where it was 4 years ago. And the fact that we're actually, this is where we were in the last bull run, right here. We weren't even below the trend line, right? Just going on the 4-year cycle. This is February 2022. So see how fast we bottomed out, which in my mind is a good thing. We really puked it out. And plus Wall Street's involved. They know about the power curve. I mean, these are pretty good discounts. Yeah. Yeah, it's not going to be so easy for the world to get out of this ZERP and NERP environment that we've been in for the last 20 years now. What do you think is going to happen with the SaaS apocalypse? Hello, Sandro. Oh, I haven't heard it, and I haven't heard of the unspeakable 30K price. So I have a different definition of liquidity, right? I mean, you can look at all of it. And my broad money is still not, all the kinks aren't worked out, but the base money is solid. And if you combine it with, say, the US view of, damn, sorry, here it is. So in the US view, we're extremely light, actually, right? Only 16 cents on the dollar is printed right now. The rest is held by bondholders. I'm not saying it's a good investment, but that's what it is. And then you can consider that, you know, the US on their monetary base maxed out at like $6 trillion back 5 years ago. Now it's only 5.5 trillion. Plus the rest of the world is down. I don't. He's saying liquidity goes down, right? That's what he's saying. I mean, this is the apples to apples comparison to Bitcoin. Is this money supply, and it's going up. Is he? I gotta. You guys know I focus too much on my own stuff. I'm not reading the other guys, but he's saying it's going down, right? His measurement. Oh yeah, the liquidity is rolling over. Hopefully, he was buying way late last year. Hmm. Okay. But doesn't he use like the broader money supplies too in his global liquidity values? I don't know, to be honest. I don't know. Because he's got a number that's like 100 trillion or something, right? Like his global liquidity value, which is more akin to broad money. In any event, I have a hard time seeing that it's rolling over. Like this is, you're at the point where, especially the US, but also other countries, if they experience some weakness, I mean, they're going to start putting on the gas more. Oh, okay. Well, it's close. That's close to this value. Yeah, yeah, sure. No, I got it. No worries. I got you. I mean, again, this is so we're on euros here for our European friends like you, Sandro. I mean, his guess is as good as mine, but this is precisely why you do this analysis, and we are generationally cheap, if not cyclically cheap. You know, not even the crypto winter was as cheap as this from this perspective. And then if you compound that with looking at how cheap, I just closed gold, but here's silver. If you compound that with looking at how cheap it is for a silver bug, it's just, it's remarkable. Hi, Rajat. Sorry, missed your message. Um, U.S. is the last looking, like I said, it's the best looking horse in the glue factory. So behind all of this money, which is another chart that I don't have so well prepared yet, but I know the rough numbers is. So this is the money, right? And I'm showing you like the US proportion of it. But behind this huge pile of $27 trillion, about 60% is US government bonds, right? And that is what foreign central banks hold. The next largest pool is gold itself, which is like $6 trillion. And then the other currencies. So the US is still in a dominant position of having the world's reserve currency. Now, Trump tries every day to hinder this with tariffs and, you know, such strong treatment of his allies. We'll see. But again, that's a common newsletter thing, right? To say that the dollar's going to zero, dollar's going to zero. I say, look at the Mongolian, whatever it is. You know, look at the Malaysian ringgit. Look at the South African rand before you look at the dollar going to zero. Hello, Dance or Dance or Dan. Sorry, my European, picking up my European pronunciation. So cheaper sats is always good. Yeah. This would be something as well I need to cover more. There's a couple ways to do velocity as well. You could do how many times does GDP go into it. You could look at the actual flows of bank reserves, which are huge, like $1 quadrillion a year for the dollar alone. But yeah, that's the velocity is it's interesting. Bitcoin is basic money. So it's monetary based money. So it is precisely this money supply that it's comparable to. And I have other charts that can show you the exact percentage. But right now, there's basically only 4 currencies that are larger than Bitcoin. That is the dollar, the euro, the yen, the yuan, and gold, and silver right now. Bitcoin passed silver actually all the way back here. That is above ground silver, but silver has roared back and is now bigger than Bitcoin. Bitcoin's market cap. So these are the ontological, apples to apples, comparable money supplies with Bitcoin. And as we were just talking about, you know, we maxed out the money supply at 30 trillion, 31 trillion globally. 5 years ago, this is about to turn. And so when you were saying, Sandro, and also you, Lunar, that the global liquidity is rolling over, according to how I need to look at more of that myself. Again, I just don't read them as much, but in my opinion, it's going to increase right now, not roll over. But I'm probably talking about a different thing than him. And this is probably the best chart for that, right? I mean, if Powell has done a pretty good job, actually, of shrinking the balance sheet, even amidst the Silicon Valley banking crisis, where Jason Calacanis was throwing a fit for a weekend, wanting to be bailed out. Somewhere here. So it's never pretty. It's a 100-year history of the Federal Reserve right here. Just compare their balance sheet to the national debt, and you get this line. It's not like it's not a computer. Yep. Yep. With all some different slight characteristics there, right? Housing and land, that is. But even gold and silver, I would say, have more and more, or I'd say less and less similar characteristics than Bitcoin in the modern world, it seems. And despite what a lot of people are saying about the gold and silver buying, like it's not really happening in the central bank market. Like, yes, China's buying, Poland's buying, but by and large, it's central bank reserves are just growing in value because of the gold price, but they grow at 0.5% a year overall. Yeah, it'd be good to check this with different housing indexes: Britain, U.S., Europe, Japan. Mm. Yes, Basel III. And when comes Basel IV? I guess if we have a huge liquidity crunch. So I do have a accurate US M3 chart, which is a little bit more indicative of a possible crisis. So here's US M3, which the Federal Reserve has not published since here in 2006. So Fed repos on top of bank reserves, this is money that we can't hold in the negative, but this is like sort of the underbelly of the pyramid. It's Fed repos and bank reserves. Obviously they're huge, they've come down. But I'll take those off just so you see this is the money that we can hold. This is public facing money supply. So M0 is the cash outside banks. Add demand deposits, that's M1. Add savings deposits, that's M2, which most people finish on M2, right? You got also retail time deposits, retail money market funds. But then the fun stuff comes in M3, and you can calculate some of this still from the Federal Reserve. So institutional time deposits, institutional money market funds, which are like stable coins, and repos, which are the fun, that's market I was talking about earlier, repurchase agreement. And what you can see here clearly is the global financial crisis was not brought about from like an increase in base money, but an increase in broad money, which is number 6 and number 7. So if I take away all the other money supplies and only look at number 6 and number 7, you see this was the hot money that held the mortgage-backed securities, derivatives. It was in repos and money market funds. And now if I put the Fed repos back, you see that they were holding it down during the silly season of the 2020s. But now they've let it go back into the market. There's a very delayed money supply. I can only get it, I'm not going to get December until like April or something. But it's pretty hot. All right, and this is September. So this is a very, you can quite clearly see on a linear chart that we're in familiar territory. Does it mean there's going to be another crisis? I have no idea. This is just the United States. Maybe the market is more, I don't know, resilient globally. in 2026 than it was in 2006. I don't know. But this is, ironically, the hot money, and it is flying right now. $7 trillion in repos, $6 trillion in money market funds in the United States. Hmm. Well, Europe is also an amazing place of regulation. That seems to be what they're going for these days. But yeah, that's what I would look out for. Also, the old Austrian school, which I like the Austrian school, but for them telling you that it was demand deposits, like the old fractional reserve banking, demand deposits being the core of the global financial crisis, it was not demand deposits. It was the hot money. It was M3 money, broad money. Now, it's true, they exploded it during, they exploded it everywhere during the silly season. And so if that money could, people are complaining a lot right now about cost of living, housing, all the rest. But just know that that was not present here. But really, the hot money is where it's at when it comes to money. Mm, that's a very interesting comment. You could be right. You could be right. Very interesting comment. I think I'm going to leave it there for tonight, guys. My daughter is home from school. If you can't hear it, her in the background. Not on morning America time here, but just know we got blood in the streets. Springtime comes, but who told you it'd be easy, right? I'm happy for our gold and silver friends, but there will come a point where their price per Bitcoin is just too cheap. We're not there yet, but that's what I'd look out for the most. All right, thank you guys for the comments. Appreciate it. I'm going to leave it there for today. See you tomorrow. Usually I'm morning European time. Not sure if I'm going to do that tomorrow. We'll see, but you never know when I get online and stream. So thank you guys. Take care.